What's the best investment advice you've ever received?
I don't know if it's investment advice, but it's the two best pieces of advice, and they're both really simple. One is accept change before it's visited upon you. And the second, a little more nuanced, it really is don't be defensive, be curious. We work with really smart people. We think we're right. But when we are confronted with people who disagree with us, rather than immediately trying to turn them around, I'm curious why you think that. I learn something every time I catch myself and ask them what they think and why. And I always scratch my head. I said, I'm so glad I did that. I really heard another point of view that I can then incorporate into my own. I may still be right, but often I'll turn around.
So what about mistakes? What would you say is the most common mistake that investors make?
Look, there's no one mistake. The one I see again and again and again for our institutional investors is the need for liquidity. Most of our institutions, whether you're a pension fund, an endowment, a sovereign wealth fund, a retirement services business, or any other form of institution, you do not need the large portion of your assets to be liquid every day. By stepping back from that need for day-to-day liquidity, you can produce excess return. I often say you can take equity risk, you can take credit risk. The risk these institutions should always get paid for is liquidity risk. They don't need liquidity every day, and they have the opportunity, therefore, to earn excess return just by stepping back from public markets, but it's not how they were brought up. I don't think people yet understand how much beta there is in publicly traded markets.
Now, if somebody came to you and say at a cocktail party, remember what cocktail parties are, and said,
I'm back at the cocktail party circuit.
Okay, so they came to you and they said, look, I'm not that wealthy, but I have an extra $100,000. I don't know exactly what to do with it, but what would you recommend that I do with it? What would you tell them?
I think the best risk reward today is hybrid. You are stepping back from the publicly traded markets, so you're getting the benefit of illiquidity. You're getting downside protection because the world is uncertain from a geopolitical and an economic point of view. You have enough equity upside that you should have pretty good returns, but you've given up that bit of craziness in case things go the other way. I think as a pure investor rather than speculator, hybrid is the best risk reward today.